and welcome everyone. I'm Rachel Deschelle, Senior Manager of Trading Services here at Charles Schwab, and I am your host for this webcast, Trading Price Patterns. Now, I am joined in the chat today by my colleague, Mike Fairborn. He will be there to answer any questions that I cannot get to, so please feel free to chat in your questions, comments, requests during the session today. And please give us both a follow on X. He is Mike Fairborn CS. I am Rachel Dash CS. And please give this video a thumbs up for other technical traders to find this video as well as they work through their technical analysis learning journey. And please also subscribe to our channel on Schwab Coaching, Trader Talk Schwab Coaching here. Now, I'm excited to share a few charts with you guys today. We're going to trade support bounces of, or possible support bounces of, previous pattern breakouts. Now, I wanted to mention one other funny thing. Now, you guys know, I think some of you guys know in the chat, my mom, who is now retired, newly retired, she is learning how to trade price patterns, learning how to trade. So she tunes into a lot of these webcasts. And the other day she said to me, you know, Rachel, you have more blazers than just that one blazer, right? And I told her, yep, but I love this one. I wear the same one every day. So for those of you that have noticed, I wear the same blazer every time I teach this class. It is because this is my favorite one. So let's dive in together. And before we get to our agenda, let's cover some important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information we're going to cover is for general informational purposes only and should not be considered any type of recommendation or advice. And we are going to go through the paper money software application. Keep in mind that there are some differences between paper money and live. Now, as far as our agenda, we're going to start with our market overview. We're going to review our past trades. We're going to discuss price patterns, place new example trades, and walk through our trade management. So, speaking of patterns, let's take a look at the S&P 500. It is back in this little box. So it was trading in this range, and this is a 20-day, 1 hour look here on the time frame. You can see that the S&P 500 traded in this very tight range, really between 7150 and 7050 here before breaking out to the upside, and then yesterday gapping below, which was that new support. Now it's new resistance in this case. So we're trading in a little bit of a box here. So we're back in that same range. You have resistance to the upside of 7150 or so, support to the downside around 70.50 there. So 71.50, 70.50. You can see RSI momentum has kind of been waning this entire time. So just kind of telling us, hey, that may have been that sign to tell us, say, that strength in the trend is weakening a little bit. Maybe we're going to see a little bit of a corrective phase here. And we've been in this very, very tight range for the last day or so here. So definitely some news hitting the tape today, especially with the Fed announcement here in a bit this afternoon. You also have 4 of the Mag 7 earnings reports right after the close today, which definitely have the power to move the market. So it seems like the market is just kind of going through this a little bit of a volatility squeeze, possibly a little price squeeze, waiting for more information here. So those are the levels to kind of pay attention to here in the near term as traders. So let's take a look at some past trades that we had placed over the last couple weeks. I will be honest, we got a little bit chopped up. We've been placing tight stops on, and maybe this is kind of our way of saying, hey, we need to give ourselves a little bit more breathing room with our stops here. So this is what we can always do when we walk through our trade management. We walk through our past trades. Maybe you want to make this in a trading journal. I know that the tools tab with ThinkLog provides a really great tool for that to basically just put notes on your trades. What worked out well, what didn't. And I think that's what we're learning from going through this trading process is maybe we want to widen out those stops a little bit here. So I'll show you guys a few different examples. One of them being CoreWeave. I'm going to put this back on the chart that we were looking at. So CoreWeave was one that we took a trade. We had an entry around 117.60 when we saw that 3% confirmation. We placed our stop down here at 103.87. We actually got stopped out yesterday on that. Now we see price trying to reclaim that previous support, now new resistance yet again. We have a catalyst coming up in a couple of weeks or so, the next week or so, with earnings around the corner. But we did get stopped out of that trade. FLY is another one that we got stopped out of. We took a 2% break on the entry and we moved up our stop actually. So our stop actually originated right around 29.92. We moved our stop to the initial breakout point. So we ended up getting stopped out a couple days ago on that one as well. Nvidia, we are still in Nvidia. We took an entry right around from this range, right around 198.46. We still have our stop in place. We could possibly move up our stop a little bit there. Put a little bit of a tighter stop on. So we're going to move that halfway up there to close to the midpoint of that big green candle there. And right now it looks like price is forming this bull flag consolidation here. I'll zoom in so you guys can see it a little bit, but you can see that steep ascent, a couple days of consolidation. That could tell us that we may see that continued move higher. Their earnings isn't for a couple weeks in the near term. Couple other trades to look at. Okay, so we had Oracle. This was another one where we traded some of these base breakouts in software. We saw a double bottom breakout and then we saw price re-enter back into the pattern. And so that becomes a failed pattern at that point. And so a lot of the times if we're a pattern trader, we typically want to get out of that trade if it does re-enter into the pattern. So I'm going to show you guys what we're looking at here. So we took an entry right around 175.18 at that 2% confirmation. And we use that breakout candle as a pivot low for a very tight stop to say, hey, we have this stop on the downside coming around $9, giving us $9 of breathing space to the downside. We got stopped out of there yesterday, and it looks like right now price is really finding support right around this zone right here, this previous gap zone. So traders would consider this a failed pattern. This may be telling traders that, hey, it may take a little bit more time for it to put in repair. But again, you are seeing a higher high here and possibly putting in a higher low in this space. So traders would like to look for a confirmed move or maybe a hold close above the high of the low day from this gap ledge. So that was the other one that we got stopped out of. Now, last week we also talked about trading failed patterns. So we talked about, hey, what if this pattern fails? Because we noticed that this was a massive double top pattern, but it was looking like possibly this could be a pattern that could fail. So this was Southern Company. And one of the things we were looking for was a close above the high of the low day. So we looked for that breakout candle that broke that area of support. And we were waiting for a close above that day, which we got here last week, to give us an entry right around 93.73. And I'm going to remove this because this was kind of our measured move to the downside that we saw there. So I'm going to clear this up a little bit. But we took an entry there and then we put the low of that same candle as our stop. So we do have a little bit of a stop there. We're not necessarily going to move our stop quite yet. And then we talked about how failed patterns, so a lot of times when they do fail, which means the price re-enters the pattern. Essentially, a failed pattern is that it fails to break out over a certain percentage. Typically, 3% is the pattern rule before re-entering the pattern. And we know a lot of the times failed moves turn into fast moves in the opposite direction. Now, that's not always a guarantee, but a lot of times when you find that there is a one last liquidity sweep before moving higher, price will reverse course at these pivotal levels pretty quickly. And that's kind of what we've seen here quite a bit. Now, price is just kind of retesting that initial support level right now. So we'll have to see if that holds, but we have our limit to the upside of the old double top, now technically just a resistance up there, up near 99. Okay, couple other ones that we had as well that haven't gotten triggered yet. Merck was one of the ones here that we said, hey, this could be a failed pattern. That kind of the same thing that we just saw before. We're using that one breakout candle as a pivot. We haven't seen that yet. Looks like momentum maybe to the downside heading into the earnings announcement tomorrow before the market. Okay. And then let's see, what other ones did we have? We had Datadog. This is another one where we haven't gotten a fill yet on this one. We have that 2% move right above this double top. And then we have our stop here at gap support for the move higher. So we've been placing a lot of trades in this class. And I think as we cycle through one of these, or I guess a lot of these, I should say, the rule that we're kind of learning is, hey, we may want to widen up our downside stop a little bit more if it still gives us a favorable risk to reward, if it still allows us to stay within our risk parameters of our account, which again is risking about $1,000 to $2,000 per trade, which is roughly 0.5% to 1% of the account there. So, and then I see a question in the chat. Sila, yes, the plan is to wait for a fill on Merck and Datadog. So that is what we're still waiting because again, when we trade these patterns, we are going to wait for confirmation. And we know in this class, we talk about confirmation as that 2% rule, but a trader will use whatever confirmation means to them. So let's take a look at some other patterns that may be setting up here where we can also kind of set up these orders to wait for confirmation. So this was one of the ones that we actually talked about a little bit last week. So this was on the pattern watch list here. NetApp, this is another technology company here, and it had a similar formation that we saw with ones like Oracle, CoreWeave, where they put in this double bottom pattern here. And right now you see price seeming to really retest this level in this very tight range over the past week or so here. So sometimes this is what you see when you do see a pattern breakout. If it was a pattern breakout that may have occurred on less volume or less participation, or maybe momentum was kind of waning leading in to that move, that could result in a little bit of a fade or a little bit of a pullback to that initial breakout level. So keep in mind, those are kind of some things to watch here. So when you're looking for these breakouts, a couple hints that may tell you that, hey, this could be a false or early breakout, or this could be a breakout that may come back and retest this initial breakout level is those two things. Momentum, which you could see with the MACD, the RSI, some popular indicators there, or even just by adding volume to your charts here by and I'll kind of show you how to do that. We'll add the volume here when we go to equities, show volume subgraph. And you can see here, definitely notice that you can see that there was a slight increase in volume on this big candlestick here but not an entire notable increase in volume that you see in some of these other areas where we've had even a tighter range of price action too. So that could have been a little bit of a warning sign there. Now, a trader may say, hey, if we still do want to trade this double bottom pattern and we see a confirmation or a bounce off of support here, that could give us evidence to a move to the upside. What levels would we be looking at here? And frankly, this is one of the levels that a trader may take a look at because you can see that there was the lower wick of this candle, which typically when you see a lower wick of a candle re-enter into a level or break support, that means that it was just a little bit of a liquidity sweep. And by that, I mean the market found its way to a certain level, took out some stops, took out some liquidity that was there, and then quickly there was enough demand to push the price of the stock back up to close by the highs of that candle. So a lot of the times when you see that as a trader, that can give you a little bit of an indication of, hey, this may be a level worth paying attention to. And so this was our low day. This was our pivot day, right? So this was the lowest day that we've had over the last week that semi re-entered into this pattern. The body of the candle didn't, but the wick of the candle did. So that body held above the close, which is the most important price here, held above that level. So that's significant. So a trader may actually use this candle and say, hey, we may look for a close above the high of the low day or that could hold to say this is where we may want to enter into a bullish trade to the upside with a measured move for this double bottom pattern or possible double bottom pattern. And that confirmation would come in with a close above the high of that low day. So that's looking at a close above 109.46 here. Okay. So I'm looking at any questions that you guys have in the chat. I know Karen, you mentioned you had a question on the tool log. Where was that tool log? Yep. So that was the one that I was talking about earlier. The tools. If you go to the tools here at the top of the screen, that header right next to charts. If you go into ThinkLog, that's basically an entire area where anytime you put notes on a trade or anytime you want to add additional notes here with that plus sign in the upper right hand corner, that's where you could add your notes here. So definitely use that as a little bit of a trading journal here. So flipping back to the charts. Okay, so we know the signal is going to be 109.46, a close above this level. Now, where could our measured move possibly be in the midst of this pattern? So we have about a $12 range here. And if we just add that to our breakout point, that would place us right perfectly up at previous swing highs, right around 120 or so. Or let's say 119, yeah, close to 120. Okay, so that's giving us kind of what our upside looks like. So I'm going to mark that right here. So 119.64, that is our upside. Now, a couple other things. So we have to decide where our stop loss is going to be. So like we have used before, maybe we could use one of these candles that we have had. Or we could use a possible trailing stop or an average true range. So those could all be different ideas to say, hey, maybe we want to give ourselves a little bit more space. Maybe we want to create a little bit of a volatility stop. So I'm going to hide some of this information on the lower part of the chart here so that we could add the average true range. And I'm going to show you guys how this works. Okay, so the ATR, the average true range that we have here, is telling us that over the last 14 days, the average range of this stock is roughly $3 and roughly 15 cents. Okay, So a lot of the times this is giving us the current level of volatility because it's saying, hey, this is the average that the stock is essentially moving in a day. So if we were to place a stop on this type of bullish trade, we could say that we're looking for a multiple of this average true range to tell us, hey, this is a volatile type of event. This is a volatility stop that says, hey, we're going to get out at this certain level. So we could use that as our stop to the downside there. So sometimes traders will use 2 times the average true range, or they may use 3 times the average true range. So definitely depends on one, the comfortability of the trader, what the risk to reward setup is, and then also the risk parameters of the account. Does that fit into the risk rules for the account? So let's take a look on the chat here. Is there a way to scan for that long wick pattern? It does work pretty well most times. So, Deepak, I don't know if there's necessarily a way to specifically scan for that pattern. Or that formation. You'd kind of have to look for a stock that you kind of have to know the time period that you're looking at. And a lot of these formations, since they're fractal, they appear over multiple time frames. So you could be looking at stocks within X percent of highs or X percent of lows within a certain number of days. So I guess Mike Fairborn, you are the king of ThinkScript here. So maybe you have a better way of answering that question to help me out there in the chat. But that's kind of my ideas or thoughts around that. Now let's place an order for this one. We know that we typically use this buy custom order with an OCO bracket here. And we're just going to use the equity example here. Some may look, depending on the volatility environment, if it's a low volatility environment, you may be a buyer of a call option here once you do see that confirmation of a support bounce. Maybe if there is a higher level of volatility, you're looking to be a seller of an option and you may be looking to sell a cash secured put or even sell a put spread maybe right around this level of support here again with that confirmed bounce. So a couple different ways that you could play this. We're going to show this with the underlying equities. So we're going to do buy custom with OCO bracket. We're going to use our $10,000 order here. Okay, so we're going to use a buy stop on the entry, and we're going to say that we're going to wait until the price of NTAP is greater than 109.46. And this doesn't look like this may happen today. So we're just going to send that in and say, hey, whenever that happens, we're just saying, hey, send that order. I know we talked about the close being above that level, but there is no possible way to say, hey, if the close is above this level, send this order. So we are going to use a stop market in this sense. Keep in mind a market order may not fill, especially near the price, especially if the stock gaps up, gaps down overnight. So depending on like this one, if the stock gaps up, you may see that we may not get filled anywhere near the stop or the activation price. Same way works for stops to the downside. So what we're going to do on the upside is we're going to place this at 119.64. And our stop to the downside, what we're going to do here is essentially we're going to take 2 times the average true range. And so we're going to say if the price of the stock moves down, and let's just say moves down $6.30 here. So roughly $6.30. That is the average true range. This is where we would want to get out of that trade. So if we take the current price of the stock, 108, or actually we'll use our entry order. So 109.46 minus 2 times the average true range, which is about 630. That gives us a stop right around 103.16. Okay. So that puts us right here. right around the low of that candle, okay? So that's where that puts us there. So if we hit confirm and send here, and we place this in our price pattern class, we can send this particular order. So I'm double checking on your guys' questions in the chat. Okay, let's see. Chris said, set the order to execute in the last 10 minutes if it is above your stop, or at the close if it is above the stop. Yes, you could do that as well. You could put a time condition on it within the order. So if you guys wanted to do that, I'll put up a buy order to kind of show you how to do that. You just have to go to the right-hand side of this order ticket, click on that gear, and this will pop up. So you could say, hey, we want the symbol at or above this and only submit when this time condition is met. So that's something that you guys could do there, is put in a time condition there. Okay, let's take a look at a couple others here. So couple different ones that we have. So MasterCard is one that has been forming this possible inverse head and shoulders pattern. So very clear horizontal neckline support, well, I guess new support, old resistance, right around 526.41. And this is heading into earnings, which earnings is tomorrow before the market. Now, this is a major reaction prior to earnings where we've had a gap up in price, and it looks like today price is forming this high wave doji candle. And essentially, what that high wave essentially means when you're looking at a candle, high wave just essentially means that there are a very long wicks on either side. So you see this long bottom wick here and kind of a long top wick as well, but price is forming a little bit of a doji, which is even more significant when you're seeing this type of candlestick pattern appear near a level of support or resistance. And in this case, we have this right on a level of hold resistance, now new support, signaling a little bit of pause, maybe a little bit of indecision here. And so what we can do is, as traders, since we know that this doesn't necessarily give us confirmation yet. So there hasn't been a close above this level yet. There hasn't been multiple closes above this level. There hasn't been a 2% or 3% move above this level, maybe a 1% move, yes. But depending on what your measure of confirmation is, we may have not seen that yet. And so for this class, when we talk about confirmation, that 2% move, we're not technically seeing that yet here. And you have a major catalyst coming in tomorrow morning that could send shares back underneath that old resistance level or propel shares to the upside here. So this is more of a wait and see type of approach, but what we're going to do is essentially set up a trade that will be ready to execute on the open tomorrow if price does move in our favor in this case. And what we're going to also do is take a look at some of those clues that we kind of alluded to before by looking at what momentum's doing and looking at what the volume has done in the formation of this pattern. Because volume is very important in a pattern like this, especially with an inverse head and shoulders where you have the two shoulders at almost equidistant levels, you have the head at a lower low. You typically want to see an increase, a notable increase in volume in the formation of the left shoulder, the right shoulder, and in the head. Now, some of these patterns, when you're studying like the volume trends in some of these patterns, sometimes the volume inside the pattern ends up actually being more significant than the volume on the breakout. So I want you guys to know it's not always an unconfirmatory signal if price doesn't necessarily see a ton of volume or participation on the breakout. Some of these patterns, it is more important that you see that volume in the life of the pattern. So what we're going to do, we're first going to take a look at volume here. And so I'm going to go to the chart settings, go to equities, go to volume subgraph, and I'm going to hit apply. Okay, so let's take a look here. What are we seeing in volume? And maybe it'll help if we put an average volume on here. So I'm going to go and search for volume average so you guys can see this, because this could be subjective. And so we're going to move this volume average up into the volume subgraph here so it overlaps. Okay. So now you guys are seeing that. So that volume average is that little yellow line. I'll make it easier for you guys to see here. I'll make it a different color. We'll make it blue so it stands out real pretty, and we'll make it a little bit bigger. Okay. So you guys can see the volume here, and I'm going to zoom in a little bit more so you guys can see this. Okay. So that blue line is giving us a 50 period moving average of the volume. So it would be a notable increase in volume if we saw during the formation of the left shoulder, the right shoulder, and the head, which would be a valid inverse head and shoulders pattern, if we saw a spike in volume greater than that 50-day average. So let's count them out. Let's see what we have here. So, whoops, let me zoom in one more time for you guys. Okay, what do we have in the left shoulder here? We have a big notable increase in volume. We have a notable increase in volume in the formation of the head. You have a couple different spikes there. And then you have one last spike in the right shoulder that puts a significant increase in volume during that formation of the right shoulder, that lift off from the right shoulder there. Okay, so that is giving us confirmatory evidence that says, hey, this breakout could be valid. But again, we're saying could be because we haven't seen, again, that confirmation or enough of a push beyond that level of resistance to give us confirmation and necessarily enter a pattern yet. But so far, the evidence is stacking and it's telling us, based off of the volume patterns going through this type of pattern, this is something that adds to the validity of a true bullish reversal inverse head and shoulders pattern. So we're going to take those studies off here. We're going to take the volume off. And the next thing that we're going to look at is the RSI. So we're going to use that. Again, price comes in as number one. Price is always king when it comes to technical analysis. So we're going to add RSI. These are just kind of indicators that could tell us possibilities about if this is valid or not. So what is the RSI telling us? Well, we have made a higher high in price than the highs that we have seen over this entire period, which is about 2 months of time. So it's taken about 2 months to form this pattern before we saw that breakthrough. And what is the RSI doing? It's making higher highs and higher lows. So the RSI is actually confirming this breakout. So when we see momentum confirming price, that gives us even more conviction as far as the direction of that underlying trend in that case. So let's take a look here and remove that. Now, since we looked up volume, we looked up momentum. I see Michael put in the chat that lower wick is sitting right on the anchored VWAP from the last high. Well, let's take a look at the anchored VWAP. Let's see where the anchored VWAP comes into play. And we talked about how the anchored VWAP is essentially just it's essentially a volume weighted average price that doesn't adjust every day. You're anchoring it to a specific point. A lot of traders anchor this to a maybe an all-time high. So all you have to do is right click on the background of one of these candles or right click on one of these candles and just set the date to anchor it. So this could be one of those notable levels if you want to anchor that VWAP from the all-time highs. It's actually coming in right above 541. I wonder if that's actually like a 3% move beyond that. Let's see. Yep, roughly about a 3% move up there, which is the true textbook confirmation of a head and shoulders pattern. Or sometimes traders or investors may actually anchor the VWAP to a specific candle of a specific date, such as earnings, because it is a pivotal event. So many different things, but this is typically used as support and resistance. This is telling us that, hey, supply is overwhelming demand right now. This is a downtrend that we have had in MasterCard, getting above this VWAP level, reclaiming that would tell us that demand is more in control. So good call out there on that one. So I'm going to hide that study. Let's talk about taking a trade on this one. I know you guys that have been in this class quite a bit have seen how we take these measured moves. We talk about how the market tends to love symmetry in price and in time. So if it took roughly 2 months to this for this pattern to form, it may take roughly 2 months for a price pattern measured objective to take place. And so it also loves symmetry as far as price goes. So that means that entire depth of the pattern, we can take a measured move from the very, very low of that inverse head and shoulders pattern all the way to that neckline high. And that gives us roughly about a $45 move. So $45 depth of the pattern, and what pattern traders do is they take that measured move and they add it to the breakout point. And that will show us our possible measured move to the upside. Again, patterns are never guarantees, but what patterns do, what technical analysis does, is it gives us a set of rules to go by to figure out levels to manage our risk to the downside, one, but to also find levels to the upside that where we may say that, hey, price may be met with a little bit of supply and we should take some of our profits off the table at these levels. And it's funny, you guys always see me chuckle when I take these measured moves in this class, because a lot of the times these measured moves, because of that symmetry, these measured moves actually result in price finding a familiar level of support or resistance. And I would say this gap from right here, from early January, would be such a valuable level of resistance just because that gap was never filled. You saw price try to rally up to that level before and it failed. So that entire gap zone becomes resistance. So that may tell traders, hey, we may want to take profit once it reaches that gap. Okay. And for our downside risk, if you wanted to give yourself a little bit more space, you could take a very deep stop all the way down here to the right shoulder, the edge of the right shoulder. But we're going to actually take this beautiful gap here that we saw, almost a pretty valid level of support that price is carving out right now underneath this level of crucial support for the pattern. That could be the level for a stop to the downside. So right around 517. Okay, so we're going to take some of these measured moves and we're going to build an order based off of that. So hopefully that all makes sense for you guys there. If you have any questions about how I came up with those numbers, definitely put that in the chat. Let's see. Okay, so we're going to click on the price, go to buy custom with OCO bracket. We're going to use that 10,000 OCO, and we're going to use a buy stop limit upon the entry to say wait until the price hits 537.20. Now keep in mind, again, if price does gap up dramatically as a result of earnings, this is going to send a market order on the open. And so if price is much higher than 537.20, keep in mind that this order is still going to execute at that next available price. So keep that in mind. This limit to the upside would be that near a measured move of roughly 568. Put that 568.83. And then we're going to use our stop to the downside at the start of that gap. So saying that if that gap is filled. So that gap is filled, that becomes an exhaustion gap in that sense. So price had re-entered back into the pattern. We want to make sure we get out of that trade. So that is at 517. So that gives a favorable risk to reward. You have $20 to the downside. You have $20 to the downside there of risk. And you have essentially about $31 to the upside. Okay. Now, if there is ways that you want to move that around, make it a more favorable risk to reward, you could tighten up that stop a little bit to the low of this candle. So maybe at the start of that gap. or you could move back your entry a little bit. So many different ways to kind of take this trade here. So we're going to hit confirm and send. And we're going to send this to our price patterns class here. We're going to hit send. Okay. So we have that in there. Let's see. Okay, let's take a look at some other possible patterns that are forming and some that you may want to keep your eyes on. So Apple is one of those that is going actually into earnings tomorrow. What is it? Tomorrow after the close? Yes, tomorrow after the close. And this is the beauty of looking at charts on multiple time frames because from a long-term perspective, what you've seen with Apple is it's held in this level of support quite a bit here, but it's making lower highs. So if we kind of connect this trend line, we can see from those previous highs, it is making lower highs. So it's looking like it's building on the longer term, a little bit of a descending triangle type pattern where the odds could favor that the price may find this level of support once again. We don't know quite yet. But if we look at the shorter term chart, that will give us even more context into what the current price action is doing as well. And so as traders, we want to look for some of these levels of alignment when it comes to our trading routines. And so what we're seeing on the longer term is actually a possible pattern that may be taking shape. Okay, you have a possible left shoulder right here, a possible head at the top, and you have a possible right shoulder. Now, I'm using the word possible many, many times because it does not, it's not a complete pattern until you see the break of this neckline support with a certain percentage move. So this could place Apple. Let's take a measurement of it, doing the opposite of what we just did. Take a measured move to the downside. That would be looking right around 255 or so if we did see that measured move. So we are looking at that one as part of our watch list. Fortinet would be another one. Fortinet is in this very long range between 87 and 75 leading into earnings as well. This entire gap really becomes an area of resistance that could be filled should they see a break to the upside. What else? Let's see. Nextera had a break of a range here, and it looks like right now it's setting up for more of a bull flag. So it's looking like, hey, we've had this steep ascent. We have a little bit of a consolidation here. So it could be setting up for a continued move to the upside. Of course, you'll have to kind of see on that. And then Gina, you had a question regarding how far back is a long-term perspective irrelevant? I'll tell you this, price is never irrelevant. So actually those long-term levels are more important than they may seem. I'm going to use this as an example. We have Microsoft coming into earnings this tonight actually, and Microsoft, the chart on the yearly looks a little bit ugly. But if you actually take a zoom out and look at the longer term perspective here for Microsoft, you can actually see that for Microsoft, this is the monthly, so max monthly, you can see a valid level of support was held. And this is a level that goes all the way back to 2021 highs. You can see price formed a cup and handle from there. Price retested there back in that sell-off in early last year with the tariffs. And then you can see again, price has found a little bit of support at that level with waning momentum to the downside. So that is a very great question, Gina. I'm glad you brought that up. That is why technical analysis, it needs to be done on multiple time frames because there is levels of price memory there. You have investors, you have institutions that have purchased or sold shares at these levels, and they're going to have a log of those, whether it's in their transaction history, whether it's in their whatever platform they're using, or whether it's in their emotions when it comes to looking at their positions gain loss for however long that they've held it. So That is a great question. I'm glad we were able to touch on that one. So hopefully this gave you guys a couple different things to kind of use within your process when looking for confirmation with a price pattern, looking at what momentum's doing alongside it, looking at what volume has been doing, how you can look for confirmation and trading a support bounce there, and even looking at patterns on multiple time frames as well. I want to say thank you for everyone in the chat for all of your great questions as always. And then thank you, Mike, for helping us out. You can catch him on X at Mike Fairborn CS. I am Rachel CS. Please like this video, help other traders find this information like this. If it's helpful to you, it's going to be helpful to them. So like this video and please subscribe to us on Trader Talk Schwab Coaching. Well, I will see you later, traders.